All right, boys and girls, welcome back. It's that time of day again here, folks. 10th of February, 2014. Welcome to your nightly newsletter. My name is Joseph James, School of Trade, sidewaysmarkets.com. Welcome back. Did you have a good weekend? Well, of course, if you needed some more snow, they got plenty of snow here hitting the Midwest and the East Coast again. I still cannot believe how much of this snow we've seen this winter. It's pretty incredible. It's pretty incredible. The weather swings. In fact, John Henry, our head of IT support here at School of Trade, him and I are working on a weather strategy for you guys coming out soon. So the weatherman's not the only person having fun this time of the year. We'll be making some money trading a weather strategy very soon. But clearly here, though, today, what happened today? Markets were trading 6% below their monthly average. What happened? How could we have prepared for today? Because I'm sure there were folks out there that didn't see this coming, that didn't see the clues, didn't see the red flags right when we started saying, be careful, today's going to be a tough day. Did you see those as well? Yeah. In our live trading this morning, we picked up right away on some big red flags. And today, we're going to talk a little bit about what happened today, a little bit about what we're expecting tomorrow. But I've got three big reasons here on the charts here this evening of why I think we're going to see some pretty big fireworks. If not tomorrow, Wednesday, Thursday, and Friday going into the end of this week. First of all, rewind the tape. Last time I saw you, it was Thursday. We were just preparing for non-farm payrolls. What happened with non-farm payrolls? Much lower than expected. Now, if you were with me on Friday morning when we saw that number come out, remember, duct tape, chicken wire, bungee cord, right? We were sitting on hands Friday morning. Number comes out dramatically lower, right? Dramatically lower than expected. Now, remember, jobless claims, we want those lower. Non-farm payrolls, we want those higher. So number comes out dramatically lower. Can't recall off the top of my head what exactly it was, but it was a shockingly low number. All of a sudden now, gold drops, crude jumps. And I'm going, what? That doesn't make much sense. Remember what happened on Friday morning? And then we had a very strange reaction to that non-farm payroll. Remember how I said on Thursday night, go back and rewind the tape, that if it came out outside of expectations, which it did, we were going to see a violent reaction. That's not what we got, right? Usually we get the tiger. We got the little pussycat. Very interesting. I'll tell you though, the big clue was to see gold and crude going in the same direction. Think about that. Gold, a shelter market. Gold rises when I have concern over stability, over the economy, right? Over the value of my dollars. Crude oil usually has the exact opposite, right? Crude, this is going to rise when we have confidence. Gold falls with confidence, crude rises. Why does crude rise with confidence? Because as the economy expands and as we have more confidence, what happens? We open small businesses. We pile the kids into the station wagon. We go for a trip to Disneyland. Crude oil, right? We ship things. We expand. Consumption of crude, natural gas, heating and cooling. All of our commodities, except for gold, usually go up when we've got confidence. So how do we have gold and crude rising right now? That was the first big flashing red sign on Friday morning. Now, originally, gold dropped, and it was like, what is going on? All of a sudden now, gold jumps, crude jumps. We can see 100, big round number in our sights on crude. Remember I talked about that last week? Remember I said early last week, do not be surprised if we're right back to that big triple digits. I know, I gotta go tell my buddies to fill up the gas tank of the boats, because once we see those triple digits, you know we're paying more at the gas pump, right? We get that emotional response to that big round number of $100 a barrel. So, Friday's report. What was going on? I'm not even going to try to pretend like I know exactly why the reaction was this way. But I will tell you one thing, as a professional trader, we don't try to think about why, do we? I don't care about why. And the time it takes me to figure out why, I'm missing the when, I'm missing the where, and I'm missing opportunities. Bottom line is, though, right now we've got a very interesting scenario after that non-farm payroll report comes out. Now, fast forward to Monday morning. What do we have? Crickets chirping. No major news today. The Monday after non-farm payrolls Half the U.S. is still shoveling out of their snowstorm this weekend, and it was quiet. The first thing we said this morning at 8 o'clock on the dot when I opened up our live trade room with students from around the world, first thing I said was, be careful. Monday after non-farm payrolls, we got a weird reaction to the non-farm payrolls on Friday. Very odd, not typical at all. That usually where there's smoke, there's fire. And today we saw the fire. Now, got some very narrow ranges. Gold, remarkably narrow. Crude oil traded 144 ticks today. By 8 a.m., it had traded 130 of those ticks. Think about that. 130 ticks in London, 3 a.m., 7 a.m. Eastern Time. We usually see 60. We got 3 times that. Now, what oftentimes tells us when we see whatever market it is, you got to have an intimate knowledge of the market you're trading. Well, we know that crude oil at 7 a.m. usually moves about 60 ticks from 3 a.m. until 7 a.m. That's about its average. Today we came in and we saw 130 ticks. That was the first red flag. The high of day would be the high, the low of day would be the low, and we'd be staying right in the middle. So remember, first clue we saw this morning. If you didn't see this coming a mile away, what can you learn for next time? Monday without any major news. The Monday after non-farm payrolls, and then the volume and the average true range, the range of trading was substantial before we even got started today. Remember, day traders, just like you and I, have to get some work done every day. So every day, crude oil has to move a certain amount of range. Okay, think about it. Everyone's got a job. Your job every day is to go out there and trade these markets. Well, so is it for everybody else. So crude's going to try to make its daily range. It made its daily range before 8 a.m. this morning. That's a huge red flag. That either means A, we're in for a huge day, or B, which is more common, is we're in for a range-bound day. So write this down. If you see at 7 a.m., better yet, make it 8 a.m. If we are over 80 ticks of range, that means 60 is my average. If we're over 80, something big happened overnight. Now, this is what I always think about. Whenever I think of big ranges going into the U.S. session, I always imagine myself being woken up in the middle of the night. JJ, get to your desk. You got to see what's going on, right? What happens is if the London session explodes, usually guys like you and I are going to be woken up in the middle of the night, or maybe we're already watching the night, and now the U.S. traders will begin to participate. So this morning, that's exactly what happened. We came in, we knew it was going to be slow. Crude just red flag right off the bat. Big range, lots of volume. And what that told us was that the job had already been done. If we were expecting to see big moves today, we weren't going to get them. And we saw that right away. We got a bunch more clues. We traded our breakout at the opening bell on gold today. That was a sleeper. That was a big clue. Watch the opening print. But I think the biggest clue this morning was coming in and seeing that big monster range had already been developed. Remember, if it's a really narrow range coming into the opening bell, we've still got work to be done. But if it's already a wide range, chances are high, the high of day and the low of day are going to hold. And we're going to be trading inside of that range throughout the rest of the session. That's exactly what happened today. With the exception of the mini Russell, the Russell was really the only one that really pushed. And boy, was that ugly today. All right? So, crude trades 144, ends up right at 100 even. Gold trades 98 ticks, ended at 1274. Russell, the big mover of the day, 120 ticks. It actually ended higher, about 0.25% at 1116. So relatively sloppy. We're stuck in the mud here in neutral at that 100 big round number. And gold, you're going to see on the next portion of this newsletter, once we grab some charts, you're going to see here we got gold sitting right at the prior week's high. Something's got to give here, folks. We can't have gold and crude continuing to go higher forever, or can we? Yeah, that word forever, boy, back in 2008, lots of professionals said that'll never happen. Well, we've learned not to make that mistake again. But again, it's going to be very difficult for crude and gold to keep going higher. Which one is going to win this battle? Which one's going to win this battle? Now, relatively slow day today, no news in the calendar, so we didn't have anything to work on there. What about this day in history? One of my favorite times of my newsletter. February 10th, 1996. Gary Kasparov, right, the grandmaster chess champion, thought to be by many people the world's greatest ever chess player. Well, he lost, he loses to a computer, right? What was it called? Deep Blue, right? Kasparov. Incredible to think that a computer and a human being, but what a great game, the game of chess. Nelson Mandela, in 1990, on this day, released from prison. What was he in there for? 27 years, right? Over a third of his life. Incredible, Mr. Nelson Mandela. And of course, we can't forget our favorite GSE in 1938. February 10th, we saw the birth of Fannie Mae. Fannie Mae was the original attempt to make liquid markets of mortgage-backed securities. Well, of course, we know now, right, almost 100 years later, what's it, about 70 years later, 75 years later, now we're seeing, of course, the liquid market, right, of mortgage-backed securities. So this day in history, pretty busy day in history. I think it's incredible that Deep Blue was able to take down Gary Kasparov, the grandmaster. Now, look at tomorrow. Tomorrow, another day without a lot of news, guys. We don't have any major Red Star news for tomorrow. This is pretty typical the first 2 days after non-farm payrolls. We're going to continue to see some commentary from politicians, from major asset managers. We've been listening into the news feeds all day today, and we're continuing to hear reactions to that. Big important thing for tomorrow, though. Tomorrow is our new chairperson, Yellen. Remember Janet Yellen, right? She took over for Ben Bernanke, big old helicopter Ben, right? Well, he's sipping a Mai Tai in the Bahamas right now. Actually, I think he's working for some think tank in New York City. But Janet Yellen makes her debut tomorrow. Now, don't expect a lot here, guys, because Janet Yellen, pretty much the same as Bernanke. What was she again? What was Bernanke? Bernanke believed in low interest rates. That makes him what? That makes him a dove. What if he believed in high interest rates? Remember, high, hawk, high, right? Easy way to remember it. So Janet Yellen is another dove, which means she believes in accommodative economic policy. Okay? I think everybody right now should be listening in closely to see what she says tomorrow. You know, major asset managers, analysts, speculators are going to be tuning in tomorrow morning, tomorrow early afternoon to hear what Ms. Yellen has to say. Again, not expecting a lot of difference between what we already know about Bernanke, what he laid out for us. She's likely to confirm tomorrow, whether she says it directly or whether she's reading between the lines, right? And that's, remember, what a lot of traders have to do is, it's not what she says tomorrow, it's what she doesn't say or how she says it, right? Those kind of clues that we get reading between the lines. Tomorrow, she's likely to continue to talk about low interest rates, right? A flexible, data-dependent tapering, and overall accommodative market stimulus or economic policy. So basically, I don't see any changes tomorrow. Low rates in 2015. Tapering will continue on that scheduled pace of $10 billion per month, and I don't see her making any major changes. Big thing, though. What's going to give? What's going to give? I've got some really big clues on the chart here together today. We'll take a look at those here. But I think with Janet Yellen tomorrow, with news at the end of the week here, and with these ranges that we're seeing on the charts, we've got three big reasons why at the end of this week, we're going to get some fireworks. Guys, we are just getting started here today. Monday evening, let's roll those sleeves up, and I got some important levels to talk about and some big clues ahead of tomorrow's Tuesday morning. All right? Don't go anywhere. We're just getting started. Stick with me here. All right, kids, thanks for sticking around here with me this evening. If you're continuing to watch this video, my nightly newsletter, that tells me you are a serious trader who wants to get better here this evening and be ready to make some money with me tomorrow morning. So congratulations on taking the first step. Before I jump into my charts here today, I want to remind you guys, if you head on over to SchoolOfTrade.com, don't forget to register for our free trial. I have a special invitation for you to come out and join me in my live trade room tomorrow at 2 p.m. Eastern Time. You don't want to miss that. You can also, of course, learn about our beginner, intermediate, and advanced memberships on our website. At the same time, if you haven't registered for our newsletter yet, all right, you don't want to be the only person out there that's not registered for the newsletter, do you? I'm kidding with you. Make sure you take a moment there to register for the newsletter. I promise I will not waste your time, right? How could I waste your time? This is all great information. I promise, though, you'll love every minute of it. All right, so register for the newsletter and don't forget to join our free trial. Let's keep going. First things first, what happened to crude today? Crude was nasty today. We ended up right about the opening range there, about 100 big round number. Okay, take a look here quickly at the VIP chart. Remember what we had late in the day on Friday. Late in the day on Friday, right, we start to whoop, 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 all the way up here on Friday and slipped right in above that 100 big round number, right? Believe me, we were waiting for it. We were expecting it. And that's exactly what happened on Friday. You had to be a little patient for it. But boy, you had some great moves going into that big round number of 100. Now here we are at the prior week high, stuck in neutral. Look at the volume analysis on this, and you can see here we are completely in balance. You'll notice the volume pretty much right at 100. The most amount of volume here, buying and selling at that big round number of 100. We had a bullish to slightly sideways 2-day relationship, a very typical trading range, and we closed, as you can see here, near the lows, or at the lows. Actually, that should be revised and say at the middle, I should say. So that was wrong. All right. So looking at this chart here this evening, you can definitely tell that we're stuck in neutral here right now. We got 1 foot on the gas, 1 foot on the brake, and you can tell we're really having a difficult time getting anywhere. But here's what I'm thinking for tomorrow. You're going to see on some anchor charts here in just a moment. But with this relatively narrow range and being right at the big round number, something's going to give. I've got this huge range down here. You can see all the way down to 97.79. So an open tomorrow morning below 99.54, I could easily see this price headed back down to 97, we'll say 97.80, right? 97.80 is going to be the prior week open. Okay, so we got this week's open right here. There's last week's open down here at 97.80. So as you can see here, we got about $2.20 worth of range that we can easily get into. So open below 99.54, I'm bearish. I'm looking to sell short. Open above 155, and I'm bullish, looking to buy long. And I actually have quite a few levels that are waiting for us overhead here. We'll take a look at that on my anchor chart. The big thing right now, though, is, guys, is that you got to be really careful trading right here, okay? Got to be really careful. You're at the prior week high. You're stuck in the mud at the big round number of 100. Tomorrow morning, I'm going to be patient to wait to see if we can get outside this range, and I'll be trading in the direction of that range. Moving forward, though, take a look at the anchor chart. Now, before I go into the anchor chart, I do want to remind you that below this video, you're going to see a number of different anchor charts. This is just the last one of the sequence that I worked on for the newsletter tonight. So this is just one of 3 different charts that you can see a much bigger picture for this. All right, because if you zoom out here, you're going to see there's a lot more stuff above and below us. Again, check out the images that were posted for you there right on the blog. Okay, now, as you can see here, we are quite bullish. We've been bullish here since non-farm payrolls came out on Friday morning. Went all the way up, got above the 100, came back below the 100. We were buying the whole time this morning on crude because, as you can see, my anchor chart, now if you're a student of mine, you already know what that green means, right? What does that green mean? It means you can sell, but you're going to be selling at your own risk. We're bullish, I want to be a buyer. So I'm always trying to be a buyer on a pullback, right? Because you want to buy at a discount. You don't want to buy a brand new car at a premium. You want to buy a brand new car at a discount if you can get it. So once we started going higher this morning, discounted price, buy, discounted price, buy, discounted price, buy, all the way up. So it took a little bit of while to kind of get this market to get out of neutral and head back higher. But once we started to see it go back higher, we pretty much knew that big round number was going to be where we were headed. And we pretty much were focused on this high here, right? What was it, about 150 or something like that? 150 and a quarter or something like that. So we knew pretty much this morning it was going to be slow, pretty sloppy, but we were able to get some profit out of it buying here on pullbacks as we went higher, all right, on the crude. Again, you can see here, we finished the day here literally at 100. Okay, take a picture of that, folks. You're not going to see that very often. At 100 to the tick. Very interesting. Now, while we have crude oil going higher, I've also got gold going higher. So that's why I keep saying something has to give here, guys. Something's got to give. Now, I'm going to be buying here. With a new higher high, I'm buying. I'm not selling, at least not yet. I'm not going to sell until I get below this 99.27. Basically, I'm looking for a buy at 99.83, looking for a buy at 99.42. If those happen to fail, we get below the 99.27, and we're going to head all the way down here. And again, remember, we have that big, wide open space, and now we get a channel here to hold us up. We got a nice big support level down here. And again, if you look at the anchor charts that I've posted here on the newsletter tonight, you'll see where that channel comes from. Right? If I zoom all the way out here, you can see where that channel comes from. So we've got some significant support here just below 98. But again, I've got to get below this 99.27 before I can start confidently selling short. There might be some opportunities to sell between these three areas here. You might be able to get short between these two here, but I'm not going to waste my time on that. I'm looking to buy here on crude. We are bullish. If I get below 99.27, look out below. I'm headed short down to that 98 area. It might be 90. It might be 97.75. It might be 98 and a quarter. We're going to be around 98 though if we get below 99.27. Okay, so that comes to crude. So very, very bullish on crude. But again, this really, really is interesting. The fact that we're stuck here at 100, right at 100. And again, I know I keep talking about this, but look at the gold. Gold continues to go higher too. Gold goes higher when we're worried about the economy. Crude goes higher when we're confident about the economy. What? It doesn't make any sense. It doesn't make any sense. And whenever things don't make sense, whether it be an entry pattern or be an anchor chart or be a market sentiment, I don't care what it is, guys. If you have an intimate relationship with the market that you trade, I don't care what you're trading, but know it. My good friend Jim Rogers always says, before you do anything, know what you're doing. Don't do anything until you know what you're doing, right? Don't trade until you have an intimate knowledge of these markets. That's why, as your coach, I can be a very big help. I've been watching these markets for over a decade. Something tells me I've learned a thing or two about the personality of these markets. And remember, when you work with a coach that has experience, you get to benefit from that experience. All right? If you're brand new at this, okay, you need a coach because that coach is going to tell you something's wrong here. Something's not making sense. Be careful. Now, look at gold. Now, I got short here on gold this morning trying to get this thing to tumble back in because I'm going, crude's going higher. Gold can't keep going higher too with it. But couldn't get anything out of it. Took a small profit target at the lows and then get bounced at a point of entry, and it just never went. It never moved. This is a huge, huge clue. And this is one of the reasons why I'm telling you right now, we're going to see some big moves this week. This does not make sense. Non-farm payrolls came out much lower. That definitely should have pushed gold higher, and it did. But if you remember on Friday, gold initially took off lower before it went higher. Something's up. Something's up. Do I know what? Not yet. But do I know it's going to happen sometime here soon? We're going to get a big breakout here very soon. This is one of the big clues that I'm saying I'm going to use this week. First of all, two-day relationship is much higher. We never even tried to fill that big gap. We have a very narrow range. Now, guys, remind me, if you've been watching this newsletter, what does a narrow range tell me? It tells me to expect a big range tomorrow. So possibly tomorrow, I don't know. We'll have to wait and see. But we know we're about to get some fireworks here. And, of course, big clue here. We closed in the middle. Look at the volume profile on this. And you can see on the volume profile, literally, all the volume piled up right on top of that 74.5. That's also the prior week's high. So clearly, these buyers on gold are confident enough to keep the price above the weekly highs. But clearly, they're not that confident to be pushing to 1,300. Now we come in for tomorrow. And this is where, again, this narrow range, we're either going to see another narrow range day tomorrow because we have no major news tomorrow and Janet Yellen's on the microphone tomorrow at the House, or we're going to see a tear tomorrow morning, possibly overnight. Bottom line is, get me above 77.8 and I am bullish. Where do you think I'm bullish to? Yep, you got it. Right above me there, 1296.4. What about an open below 72 even? Now you'll notice 72.5 was the low of day today. Okay, 72.5, that was the low of day today. So that's where we typically look for the opening print to be below. I chose to use Friday's high, which is only 5 ticks away. So I'm making kind of a judgment call there. An open below 72. This is exactly the same scenario we have on crude. We have potential for a big move back down. I've got a gap fill. We get a gap fill down to 1262.9. We have a complete failure at the highs and a tumble back to 1255.5. So, guys, I'm not going to try to predict, but what I do know, though, is above 77.8 tomorrow morning, and I'm definitely looking for a buy. I may not get it, but if I do get it, I'm all over it. An opening print below 72.0, again, I'm all over it to the downside if I can get the entry pattern short. And we got some targets down here again. I would definitely look for that gap fill first, 62.9. And then you got 55.5 down below us. What's going to happen tomorrow? Who knows? And the more I look at this gold chart, the more I'm wondering, is tomorrow going to be that big day? Here now is my anchor chart on gold. Remember, like I said earlier, I've updated the blog this evening in the newsletter with all of my anchor charts. So this is just one of the 3. If you want to see the big picture, make sure you guys open up those images on the blog post. All right, now first of all, if you zoom all the way out, here are some old range highs, way, way, way back. Okay, so 1281.9 right off the bat. That's where we know that they've already been up there, right? We've already been to 1281.9 in the most recent history. So getting straight to 1281.9 probably going to be pretty easy if these bulls come in and take charge tomorrow morning. Now, a couple things that I'm seeing right now. First of all, what color is my anchor chart? It's green. What does that tell me? It tells me to buy. What do I need to be a buyer? You got it. Buy at a discount. New higher highs. So what we're not getting is, now we're definitely at a discount, but we're not getting new higher highs right now. You'll see here I drew in here this little triangle tool where we've got lower highs and higher lows. That is what? That's called consolidation. Now, members, when I say consolidation, when I say price wedge, you should be thinking about one specific Fibonacci retracement level. All right, I'm not going to give away all my intellectual property on these open newsletters, but members, you should know exactly what I'm talking about. If you don't, make sure you come in tomorrow morning and ask me what I was talking about here in the newsletter tonight. The bottom line is, this is screaming at me right now that we have some very, very important decisions to make before we can start seeing this thing break out. Again, just like the VIP chart, we're stuck in the mud here right at that prior week high, and that's a huge sign that something is coming. We're not going to sit here forever. It tells me that the buyers were strong enough to keep the price above the high, or for the most part, but at the same time, they weren't strong enough to push it higher. This tells me now that I have buying opportunities, but just like on crude oil, if I get below this lower end here, now we could possibly see this thing really start to tumble here going into Tuesday, Wednesday, Thursday this week. We are bullish on the long-term trend, sideways in the short term. I'm definitely going to be looking for an entry here to buy this 72.5. So watch it bounce off 72.5, 71.2, and then look for your entry there. Target up top here, 1279.6, 1281.9, 1285 even. Again, I got one more chance here. If we get down to this 1269, okay, that will also be a level I'll be looking to buy, but that's the last chance we have for those buyers. Once I get below 68.4, look out below here, ladies and gents, because we've got that big gap that we talked about on the VIP chart. So right now, we're trading sideways. You've got to be very careful when you see a sideways range like this right at the prior week's high. We know something's got to give here with both crude and gold, both pushing higher. What's it going to be? Is gold going to tumble off the highs and crude goes higher? Is crude going to tumble and gold goes higher? Who knows? And the best part about being a trader is I don't need to know. All I have to do is wake up tomorrow morning, come into my trade room, find out where the opening bell puts us, and trade accordingly. I don't need to understand all the mumbo jumbo out there. All I have to understand is, am I bullish or am I bearish? Then that tells me what to do next. Okay, so be ready here on gold for anything tomorrow. Obviously, if I had to guess right now, I would say we go higher. But again, I don't think we're going to be able to see it keep going higher for the rest of the week here. As long as crude keeps going higher, we'll have to wait and see what happens. Last but not least, we can't forget about the mighty mini Russell. The Russell was the big mover today, which is amazing because if you looked at the Russell earlier this morning, you would have said, is that Russell stuck or something? Is the data even updating? Because it looked very, very slow. It was very slow this morning on the Russell, which is quite interesting because we expected after non-farm payrolls to have a pretty good day on the E-minis. But hey, I don't make the rules. I just dance to them. So we know that today we had a sideways, slightly bullish, but pretty much sideways day. A narrow range, again, narrow ranges tell me to expect a big range tomorrow. But the big clue here is the highs, right? We get a closing print at the high. Whenever we close at the high, right, we close the high on Friday, close the high today, we continue to think here, we're going higher. Now, if I think the equities are going higher, then I think crude's going to go higher, and I think gold should end up collapsing here. But again, who knows? Who knows? We'll come back tomorrow morning and we'll find out what the charts tell us. If I get an opening print tomorrow morning above 16.2, I'm going right over that previous week high. You know that's on our radar up there at 27.7. Remember, everybody freaked out when the equity markets took a dive the past 10 days. All it was a small correction, just a small pullback. Now we're going to new highs again, and we're gunning for those prior range highs that we see all the way up top here, okay, 1145. So there's last week's high, okay, the first week of February, and then up top here, 1145, right, that's the last week of January right there. That's the level, the line in the sand. So 1145. Get above 1115, 1116.2. Again, up to the prior week high. Take some profit. If we keep going, you better believe where I'm gunning for 1145, right? That 2 week ago, that high from 2 weeks ago. If we go lower, below the 04.7, I'm going to take some profit off at the levels that I have posted below me with a final target down here at the prior week's low. Okay, so definitely taking some profit off around that 1093 area. Okay, that's last Thursday's low. And then, of course, we got last Wednesday's low. That was the weekly low before we then started to pull up here and move higher. So once again, very narrow range here on the Russell. That continues to tell me that something big is coming. Who knows what it will be, but it looks like it's going to be to the upside. Again, I'm not going to predict right now, though. I'm going to wait to react here once I see what the opening bell looks like tomorrow morning. Now, if you're a perma bear, you might want to change your television set right now because this anchor chart ain't showing any bears around here. You can see we are bullish here on this anchor chart. That's for sure. Okay, the VIP chart, yeah, a little wishy-washy. But looking at the anchor chart, though, there's really the only thing you got to worry about right now is waiting for price to pull back so you can buy it. That's the only concern that I have right now. The only thing I don't like about this chart is the fact that we were at the high. Okay? Now, in my trade room, you're going to hear me say, I don't want to buy the highs. I don't want to buy when price is at a premium, right? I want to buy when? When price is at a discount. So where on this chart do you think we're going to see price at a discount? What do you think? Absolutely. 1110, 1107, down around the lows of this bullish channel. Okay? Now, doesn't mean I can't take a long trade right now, but if you want to be successful over a long period of time, buying at the highs is not going to do it. Yeah, you might make some money on one or two trades, but the reality is that I want to buy at a discount, whether I'm buying gold, a new car, a pair of blue jeans, right? Or some filet mignon. If I don't buy at a discount, I'm really going to be hurting when I go to sell it. Targets overhead here. 11.18, 11.22, 11.26, and 28. My number one target, though, my first two targets here are the most important, 18 and 22. But again, I want to see price pull back here before we take that long. As you can see, though, very, very big clues here. In fact, if you measure here from swing low, right, up, you'll see that's where we get this 22.1. So symmetrical moves here on the Russell. You can even continue to measure symmetry, right? They're not difficult to find, all right? So we know where we've got some easy targets for us overhead. Guys, get ready here. Get ready. If what I've talked about today doesn't make any sense to you, if you need more help on this, come join me as a student tomorrow. Because every day in my live trade room, we go over exactly what we're talking about right now. But the difference is that then we go into action. We hook up our printer to our computer and we print those $100 bills like every professional trader should be. Guys, I want to thank you so much for watching tonight. Thank you for sticking around with me. Don't forget, you got Valentine's Day coming around the corner. Don't forget to make those dinner reservations. And they're really tough on us this year. Because this year, Valentine's Day is on a Friday. Oh, man. Usually they're in the middle of the week. I got an excuse. Oh, we can't do it during the week, right? This time, guys, you know what I'm talking about. I think the odds are not in our favor on this one. I think we're getting hosed this year, Valentine's Day on a Friday, right? So don't forget to make that reservation. All right? Don't say I didn't warn you. And I'm looking at myself too right now. You know who's watching me right now for Valentine's Day. All right, guys, finished up. Have a great evening. We'll see you tomorrow morning at 8 a.m. Eastern Time. Don't forget to learn it so you can earn it. From the entire team here at School of Trade in our corporate office in Los Angeles, California. Adios, amigos. Bye-bye for now.